All right, everyone, welcome back to another weekly Roundup edition of On the Margin. Today, I am joined by not only my co-host, Mr. Mark Yusko, but special guest, Zaheer Ebtikar. Zaheer, Mark, welcome to the show, fellas.
No, great to be here. Great to be here. And again, it's still too dang hot down here in North Carolina to wear socks, but I do have the socks for the sock reveal. I have the rest in peace Bitcoin from my friends at Mount Sox. But the reason this is so important, you see the little angel's wings and the reincarnation. I'm just so tired of the Bitcoin is dead articles. I think we're up to 466 or something times it's been declared dead by the media, and it's not dead, and it's not going to be dead. In fact, I did a call the other day with a company we're invested in, and we're looking to make another investment, and they provide infrastructure to trading desks and big customers, hedge fund customers around the world. They're growing 300%. The demand for their services is literally off the charts. They can't fulfill. And it's everything from the whole derivatization and institutionalization of these assets. And when I say these, I really mean Bitcoin, Ethereum, and a few others, but mostly Bitcoin, as full, and stack is the wrong word, but full featured, institutionally active, investable asset classes. So not dead.
If you want some data to support that it is in fact not dead, you should go to bitcoinisdead.org. Where it is actually chronicled in extreme detail the amount of times, and it links to every article that said basically since 2011, I think when the first one went live, or maybe it was 2010, that Bitcoin is dead. And agreed, Mark, it certainly is not. Zaheer, do you have any socks for us by any chance? I'm putting you on the spot here, my man.
Dude, I wish. I was explaining this to Michael earlier, but unfortunately tested positive for COVID, so no sock life for me for about a week. But hopefully it gets over that hump soon, so I can wear my socks again.
And he's still doing the show with us. What a champ!
Yeah.
All right,
Feel better fast.
Yeah.
It's not a big deal at this point, but we hope you feel better.
All right, guys. So we brought Zaheer on here for a very special reason. Mark, you and I have been talking a lot about where we are in the current market cycle of Bitcoin. We know it's not dead, but we know it's not at its best either. So we wanted to bring Zaheer on. Zaheer works at Ledger Prime, right, which is it's a great crypto hedge fund, and he's got some more specific thoughts on the market. So Zaheer, you're sharing a slide here where we're looking at the total market cap of crypto in general, and we're looking at that at the stablecoin percentage. Mark, to use your phrase, if you're not following along with us on video, we are looking at alligator jaws here. So Zaheer,
Yes.
Walk us through why are you showing us this chart? What does it mean?
Yeah, I think there's been a lot of questioning and a lot of uncertainty in the last couple of weeks around have we reached a bottom for crypto, and what does that look like, and where do we put ourselves in the macro landscape if we've been following a lot of the monetary policy decision making in the last couple of months. And I think one thing that I really enjoy looking at is just looking at the stablecoin percentage, or almost like a quick ratio for crypto, to look at how liquid crypto markets kind of are. And as you can see, this is historically in comparison to very, very crazy events that we've had in crypto, where after the COVID crash, we had about 5% of the entire market cap go into stables or something, some number very close to that. And you can see at every relative bottom that this number has constantly gotten larger and larger, and finally gets to the point where it's almost 20% at one point of the entire market cap of crypto. And what this tells me is two things. Number one, it tells me how much resilience there is in crypto and how much value there still is in crypto. And so if you can look at this both in terms for saying the overall market cap of crypto is down substantially, the stablecoin numbers actually haven't dropped much. And so on this chart, you can look at the aggregated amount of stablecoin market cap, and that went from about a peak of 160 billion only down to about 146 billion. And this is including all of the large liquidations we've had, all of the large, and this is both on chain and also the the lending, the credit crisis of crypto, essentially, the 2008 moment for crypto. And even still, after all of these events have transpired, we were only down about 15-20 billion dollars in stablecoin market cap, which is pretty remarkable. And it almost all exclusively comes from Tether. So USDC and BUSD, which is Binance's stablecoin, have been consistently growing in that time period. And bringing it back to the original chart, what this also tells me is basically how much sideline capital there is in crypto, and how much, so to speak, of the idea of dry powder, exists in crypto. And I think, when you have double-digit percentages of the market cap of crypto in fiat and fiat, backed currencies, essentially, that's a very good sign. It's a very positive sign, and you're not seeing that same type of contraction that you might have seen back in 2018 or 2019.
One thing that comes to mind here is think looking at like the relative performance of Bitcoin versus ETH, say, in the past cycles, right? The kind of trend for crypto is Bitcoin tends to lead, alts follow, right? They tend to outperform Bitcoin, but then on the way down, Bitcoin is what people rotate back into, right? So there's a high amount of correlation between Bitcoin and alts, but they fall. Bitcoin falls relatively less and outperforms in the bear markets. I wonder if do you think the introduction of stable coins and having them be such a significant portion of the market cap now, do you think people are rotating back into stables more than Bitcoin? So stables are almost weirdly stealing market share from Bitcoin in a sense. And does that explain some of the outperformance of ETH versus Bitcoin on these drops?
Yeah, I think the entire industry. So I wrote an article about this. This is my first article that I wrote for Deribit Insights, um, basically talking about the cultural change that happened between 2017 and 2021, and mainly talking about how stablecoins completely um, removed Bitcoin being the quote unquote store of value for all of crypto. And this is a good thing, I think, because stablecoins generally have less volatility. Investors can hold on to them for a longer period of time, and mainly because you have the trading pairs for all exchanges go from Bitcoin collateral to stablecoin collateral. So that both impacts very heavily the market dominance of Bitcoin, and then also the relevance of Bitcoin in comparison to, say, Ethereum. So this has been a huge shift that's happened in the last couple of years, and this is if you look at crypto as a whole in terms of the most successful products that we've had, you could argue that the two most successful products that have seen product market fit have been stablecoins and exchanges. And now you can argue NFTs and so on and so forth, but stablecoins have really revolutionized crypto in a way that it was very hard to imagine, right? So both Circle with USDC was around 500 million in market cap in 2019, and now that's a $60 billion endeavor, right? This is a very large money market fund, essentially, and same thing with Tether, right? So it's a $60 billion bank, essentially, and this is you're getting into a really really large ball game of how much money can go into these things, and they don't seem to be stopping, and that growth is going up regardless of bull or bear market at this point.
I have two follow-up questions for you there, and Mark, maybe I could call on your wisdom here as well. But even when to hear you describe, right, Circle or USDC as a potential money market fund, right, or Tether, right, there's an enormous amount of concern from regulators, right. So there was a Forbes article that came out yesterday that apparently, quote, every single U.S. exchange is currently being investigated by the SEC, right. That's probably a direct result of the high-profile blow-up of several centralized lenders, right, most notably Celsius. So I guess my question to you is, how do you see regulation impacting stablecoins? Because we also did have a very high profile stablecoin that blew up. It wasn't a fiat collateralized stablecoin like a Tether or a USDC. It was an algo stablecoin, right, in the
Wasn't a
form of USD.
stablecoin, was not a stablecoin. They shouldn't even been allowed to use the word stablecoin. It's like me calling myself an athlete. It's just, that's a misnomer. It's just not true. And, I can say it and I can even believe it, but you shouldn't be allowed, and maybe it shouldn't be against the law for me to call myself an athlete, but it should be actually regulated, and it should be against the law for a algorithmic Ponzi scheme to call itself a stablecoin. It's just not.
Yeah, I think following on what Mark just mentioned, broadly speaking, I think stablecoins are probably one of the best things for America. And what I mean by that is that you're in a
So here
time
we are going
where
to get along so well. I mean, I am prone to hyperbole, and you just out hyperbolaed the hyperbole master. I love it. Love it.
yeah, I mean, they truly are the best thing for America because in a time when your hegemony is essentially being questioned left, right, and center, you have this new product come out that is basically getting the entire financial stack of crypto monetized in USD, which is really really good. And then you also have I wrote about this briefly as well. This idea that in an environment where the Fed has to tighten its balance sheet and it has to sell all of these bonds, right? Like now you can actually sell these bonds to someone, and if there is a realistic scenario in which USDC or Tether or some other stablecoin could actually become one of the largest holders of U.S. Treasuries. This isn't such a far-fetched idea anymore. We're at $60 billion today, and if the industry is on this same trajectory, $1 trillion market cap is no longer that hard to believe. And if you get that for a number of stablecoins, maybe two or three, that starts becoming a very interesting kind of game to play, so to speak, for Washington. I think a lot of this questioning that's coming from the SEC is I guess in some ways built up demand to kind of go after crypto. And I think after the credit crisis and also Luna imploding, it seems very obvious that a regulator would use these events to go and put their stamp on the industry. But I think thankfully the people in Congress, our new blockchain associations and different groups in the U.S. are doing a terrific job informing people in office to basically treat this in the right capacity. And I think it was Senator Pat Toomey who, right after Luna imploded, tweeted out something saying, it's okay to make mistakes. Failure is an option. This is not the end all be all for crypto and stablecoins. And being able to see the success of USDC and Tether and DAI and all these other stablecoins is a really good thing for the broader crypto market and for the United States as a whole.
Yeah, but I'm gonna take the other side of the nice government's here to support. I'm from the government. I'm here to help. Mm-mm. Look, we are right in the beginning of the then they fight you phase. 2009 to 15. First they ignore you. Bunch of nerds and geeks playing with your funny magic internet money. Who cares? Then 2016 to 21. Then they laugh at you. Ah, God, look at those nerds and geeks playing with their magic internet money. So stupid. Now they fight, then they fight you. And 2022 to 27, the fight is on. And all this nonsense about, well, we didn't do it to Luna and to UST. Yeah, you did. It was an intentional attack, most likely perpetrated by the people who denied it, although we'll find out later. But and it's not a coincidence that the day after, Ms. Yellen had a prepared statement talking about the need for regulation of stablecoins, even though UST was not a stablecoin. So go regulate that, go regulate fraud, go regulate bad actors, but don't go after. And why do they want to regulate, stablecoins? Why do they want to investigate exchanges? Because the incumbents are really unhappy. The incumbents are really unhappy at this red line surging and going parabolic because every dollar that goes into a stablecoin is coming out of a bank. And so I'll take the flip side a little bit here that good for America agreed in the sense that America is a wildly over indebted banana republic with a toilet paper currency. Everybody says, oh, it's so strong. No, it's not. It's just less toilet paper. It's a higher brand of toilet paper than the yen and the euro. But this idea that you want to fill up a trough of a stable coin full of Banana Republic bonds, just because they've never defaulted doesn't mean they won't default. And we got a whole nother topic on that later. But this idea that all of that capital is fleeing the banking system. And look, this is not dissimilar we've talked about this on prior shows. This is not dissimilar than the reason Ant Financial got sidelined in China, right?
Mm-hmm.
Ant Financial, six years ago, I think, set up an online money market, basically inside their app, and you could take money out of the banking system and put it on your phone, and you got paid interest. And they got $90 billion in less than a year. They became the third largest money market fund in a year. It took Vanguard and Fidelity 70 years to get that much money. So the PBOC said, whoa, stop. Can't do that anymore. Shut it down. Well, now it's $260 billion because they didn't really shut it down. So everybody's like, well, why did Ant Financial get shelved and why aren't they allowed to go public? It was because they defied the government. And look, the banking system in China makes the US banking system, which is over levered, not as over levered as it was, look like a piker. It's really over levered. So if you take capital out of the Chinese banking system, then you got problems. So they showed us the way of how to attack this. And the Fed has worked really hard since the global financial crisis to re-liquefy the banks by keeping interest rates at zero. Right? That's the reason interest rates were at zero. It wasn't to help us or anyone listening. Right? Anyone borrow at Fed funds? Nope, not anyone. The only people that borrow at Fed funds are banks. Banks borrowed Fed funds at zero, now a little bit higher, but they were borrowing at zero, and they would buy treasuries because they were the only people that buy treasuries. The Chinese won't buy them, the Russians won't buy them. You and I wouldn't buy them. Why? It's a bad trade. So they buy treasuries, and they make a 3% or 2.5% riskless spread. They lever that up 11 or 12 times. And JP Morgan, for the last, umpteen years, has not had one negative trading day. How is that possible? If you're trading, you're going to have negative trading days. Well, you're not trading. That's just riskless arbitrage. So all of this is interconnected to the fact that Chinese don't want our bonds. Russians don't want our bonds. Chinese and the Russians just set up a deal. I love this. Two things they're doing. One, in the middle of the night, the ships are turning off their trackers and transferring oil so they can go to China. Love that. Stealthy, very cool. In the middle of it, imagine a big oil pipe, transferring. And then the second thing, they just set up an exchange where you can now price your oil transactions. I'm sorry, no, your fixed income transactions, your bonds in renminbi. This is a massive, massive deal. And it goes to the hegemony point that Zaheer was making. The hegemony is under attack, and it will go away. Right? The US dollar is on the way out, the same way the pound sterling went out from 1913 to 1944. It took 31 years. This isn't going to take 31 years. And stable coins and crypto are going to accelerate that, which is why they are, enemy number 3. China's number 1, Russia's number 2, we're number 3.
So I have a question because I can kind of see, maybe if I thread the needle here, because I can see what your initial point there was here, which is the U.S. is going to need some form of bid, right, for treasuries, which is right the kind of consensus has shifted, like why would you own bonds, right, go short bonds. But on the other hand, and I think regulators actually might view it as a source of risk, right? Because what they're really worried about is like a run on Circle, right? A run on the bank. And then if they own $60 billion worth of treasuries, then they become a seller, and they're worried about that too. Shout out Jim Bianco, who flagged that to me initially. But on the other hand, the other thing, and Nick Carter has really been pounding the table on this. There's a great article that he wrote, published in CoinDesk, I think, in September of 2020, so 2 years ago. But it's kind of this idea of the dollarization of the world. And ironically, this space that the US doesn't really like, that they're threatening to crack down on and all this stuff, the winning asset, the store value asset, which Zaheer, you just said, is the dollar. They didn't have to do anything. They just made a digital form of the dollar, like a crypto form of the dollar. And I feel like that actually could be so the one aspect is like a buyer of treasuries, but the other is just, this is another proliferation of the dollar in a space that desperately needs solid collateral, right? And specifically, it needs uncorrelated collateral, right? So collateral that's not necessarily going to go up and down with the entire market cap. So I thought it could be good for that reason as well, but I don't know. maybe just me. So here, I want to make sure we get through any other slides that you have. Anything else that you want to walk through here?
Yeah, I think just one more, just talking about quote unquote this idea of a bottom. So this
Mm-hmm.
is what I mentioned earlier, which is the stablecoin market cap versus the total market cap. And again, not much of a dip across the board, and this thing has been pounding along for the last couple of years, and kind of first time ever really stalled out, but it even still is kind of picking back up. We saw Tether with the first $1 billion print in a while. So that's starting to look good again. And then this chart that looks a little bit crazy, just to show the relative outperformance of crypto. There's been a lot of conversation, a lot of chatter about where crypto prices are relative to equities, especially this past week. There's been a lot of concern that Nasdaq and SPX have been going up, but crypto hasn't been going up as much. But when you look at it on a more legitimate time frame, maybe on a 1 month, 1.5 month time frame, you can see that across the board, crypto has relatively greatly outperformed Nasdaq and S&P, particularly ETH and ETH related EVM products. So you have ETH go up more than 50% in a in a month and a half. Maybe it's not that easy to constantly pound up higher, throughout the last couple of days. And it also works itself out, right? For anyone who trades, nothing goes up in a straight line, right? So a lot of guys who buy 800, 900 buck, ETH, they want to sell their 50% gain, right? So that's what a lot of this really comes down to. And it really shows how much more dominant the ETH narrative has gotten in the last couple of weeks, when you see ETH outperformance this wide against Bitcoin. So I think as the merge is also coming around, people are really starting to stack on their ETH trades.
Yeah, I would echo that. I mean, just my inbox is full of pitches just about the ETH merge, and I think one thing that's been pretty interesting is the options activity, so the open interest on ETH options, right, which has really spiked. And I think what's interesting about that is that people are obviously going to speculate around the merge, but the chosen instrument that is being used is actually options instead of just buying spot, which to me signals a more institutional speculator, or at least a more sophisticated speculator. And they're pretty short dated options as well. It's like September, end of September. So
There's a lot of calendar spreads for calendar calls that people are really putting on nowadays, and it makes sense, right? Like this is a meaningful way to get exposure without piling into ETH on spot, and
yeah,
the market's gotten a lot less liquid in the last couple of weeks. So this is a major inhibitor to getting a lot of institutional flow. Realistically, if you had a couple $100 million worth of ETH bid, that would push the price up significantly, as opposed to maybe 3 months ago,
yeah.
because of how much the credit crisis has really hurt crypto's liquidity.
Yeah, but I think this also points to, again, this institutionalization, and I don't mean that in the sense of the institutions are coming, they're going to pump all our bags. What I mean is just
Wait, they're not?
well, they are, but
Eventually.
that's not what's going to make number go up, right? Number's going to go up just by continued growth and adoption, and
Yeah.
the network value rising. But the institutionalization I'm talking about is just the increase in the number of instruments, the types of trading around the instruments, the talent migration
Mm-hmm.
from the traditional world into the crypto world. You've got some really sophisticated trading firms now with big teams dedicated to this, doing very esoteric trades, and I mean esoteric with a positive connotation, not a negative. And it's all really really good for the ecosystem, because again, back to the when people say, well, this is just a Ponzi and it's going to go away and it's dead. Like, tell that to the thousands, tens of thousands, hundreds of thousands of people who have steered their entire careers into this space and are spending all of their time and effort, and they're doing stuff that the average investor has no idea, right? When you talk about calendar spreads and things that are normally in the oil market or the gold market now happening in digital asset markets. Wait a second. Those are smart people with lots of capital behind them. Why would they be doing this if it weren't a real thing? And the other thing I love about this chart, and it goes to, I don't want to say that we were the first, Michael, but we were first to officially declare winter over.
You were the
And
first.
why did we do that?
Credit where credit is due.
And why did we do that? So we did it because of the chart, right? Which is, and it's hard to see the orange line, but you can see it with the purple line too, the Matic line. But this concept of lows, real lows, are formed when you have a series of higher lows and higher highs. And so it's this, ball bouncing up a set of stairs, as opposed to, bear market is when the ball is bouncing down the set of stairs, and each bounce is higher. That's just kinetic energy, but you keep making lower lows and you end up in a really bad place. But here you keep making higher lows. And it was that third higher low 3 weeks ago where we're like, spring is sprung, winter is over, and we're off to the races. And now we've made another higher high, just over 24, and we've made another higher low. And this constant increase in confidence and pulling capital back into the markets is how we go from spring ultimately to summer. Now, summer, we'll get the crazy parabolic blow off top again. And Michael Saylor will probably be back, even though he's kind of on the outs right now. Another one of Bitcoin not dead, right? I love that Saylor's quote, "In my next job, I'm going to spend even more time with Bitcoin." Like, I'm not sure that's possible unless you have time. But
I have a question for you guys. What is your interpretation of Saylor stepping down as CEO and going to exec chairman? That news kind of surprised me.
Yeah. In my opinion, I think I think the market has finally, I mean, people have been verbalizing this for a while, but I think the market's finally realized fully that MSTR has basically turned into a hedge fund. And why focus your time on the day-to-day of managing a data company when if you're a hedge fund manager, you should go spend your time really evangelizing the product for one, and then also spending your time getting better fills, spending your time really focusing on Bitcoin, right? And I think you can for Saylor too, right? Like he owns the majority of the shares, right? He owns the majority of voting rights. So it's 100% coming from his own volition to step down, and it makes sense, right? You can become a rock star and by really turning Bitcoin into a mainstream asset, and to some extent he's already accomplished that. So
yeah, no, I think it's a really important analysis. Look, people forget, because most people actually were still in kindergarten when it happened the first time. But this is not Michael's first rodeo with Hail Mary. In 2000, let's just say Michael had a little challenge in that he had an idea for a business, and there wasn't really much there, and he made a bunch of big pronouncements about stuff, and he squeezed the shorts. And it's one of my favorite stories in the investment biz, which is, he had a $3 stock that started going up and had all this stuff. Some of it turned out not to be true, and he kind of got in trouble and was paid a fine. Didn't anyway, but he threw a Hail Mary, and it worked, and everyone got short, and the stock went to 100, and they carried out the shorts, and then it started to go up some more, and the shorts came back, and it went to 200, and they carried them all out again. And then he really tripled down on this whole vision, his vision of the future. And the stock literally went to $330 or something. And then it went to 3. Okay. So, I mean, it literally wiped out. And then he got fined and had to pay and got big trouble. And then it was kind of not a story for almost 20 years, right? Everyone forgot about this guy. And the business is meh. It's a fine little business, but it's been displaced by bigger, better, faster, stronger competitors over the years. And, you know, he threw a Hail Mary. He bought into Bitcoin. He basically turned himself. He's really a digital bank, right? I mean, he's borrowing money and he's buying an asset and he's basically running a liquid bank with one big depositor and one big owner. And so there's all kinds of potential nastiness around it, and we'll find out how it plays out. But I totally agree. If you want to protect that thing that you have put, if you put all your eggs in one basket, you better watch the basket and you better really focus and spend your time there. And I also think he's going to need to do kind of what Elon did at the trough of, when the short sellers were on him and the stock was going down and things were looking really ugly. You got to be up for a true manipulation. You got to really get into it.
I didn't think you'd say it. I didn't think you'd say it. So
Mark keeps it real.
There it is.
He keeps it real.
There it is. You gotta squeeze the shorts.
You gotta squeeze the shorts.
On this show, every time Mark says something not lovingly of Elon, we get all the comments in the YouTube section. The comments all come for us at that stage. But like, I got, what would you?
The fanboy, bring it. All the Elon disciples of the cult. I love the devotion. I mean, I admire the devotion.
Yeah.
I think it's ill-founded personally, but I admire it. And bring the comments. It's okay.
Yeah. I to maybe not to detour us too much there, but like, did you guys see these articles like about Elon's father, Errol Musk, and like some of the comments that he made? And I was like, okay, some stuff is starting to fall into place here. It's just weird, dude. He said on radio, he was like, oh yeah, no, not particularly proud of Elon, but Kimball, really proud of that. He's at the show. I was like, that's a very odd thing for your dad to say on air. It's just very bizarre.
Very odd.
Yeah.
I mean,
yeah.
And even more odd, Elon aside, Kimball? Really? I mean, really?
I just, yeah. I don't want to speculate on people's personal lives, but like, I will say some of the recent Errol Musk comments, I was like, some stuff is starting to fall into place. Speaking of just MicroStrategy.
I think it's going to be a reality TV show someday, kind of like Ozzy and his wife, and the husband, the wife, the mom, dad, the series of wives and girlfriends, and I mean, it is right out of a reality TV script.
Did you see the troll that he did? So Rivian posted their numbers. It was like horrendous numbers or something. They shipped like 700 cars. And Elon comments on it on Twitter. I had more kids in Q2 than they shipped cars. I was like, honestly, see, that's where I was just like, I don't like that, but you have to respect just how bold that is. Maybe you don't have to respect it, but
I mean, you have to admire the chutzpah, right?
I agree. I think that's. Yeah.
You have to admire the unbridled look. I mean, this is a guy who criticizes the regulator routinely, right? He's like, bring it. I'm untouchable. And look, pride goeth before the fall. And look, I've been saying that for a while and it hasn't fallen, although it's down a lot lately. But anyway, who cares?
Yeah. You reminded me of something, Zaheer, when you were just talking about MicroStrategy and maybe Saylor accepting his destiny actually as being a hedge fund manager as opposed to a stock. I will say I was looking at a bunch of crypto stocks yesterday, and you could actually see it was like crazy. The last 5 days, they were all trading right within a band, right? It was like Galaxy, Voyager, MicroStrategy. They're all trading like up like 15% or something like that over the last 5 days, except for one, which was Coinbase. So big day for Coinbase on multiple fronts. Yesterday, we had a BlackRock integration and announcement, and there's an integration with Meta, right, on the NFT front. So let's break both of these down, right? Because Mark, this is another dimension of the institutionalization that you were alluding to. So I'll
Hashtag
read.
probably a fad, rocket emoji. I mean, it's clearly a fad. I mean, clearly
Clearly.
this is passing fancy, not important, and I don't even know what Zaheer is going to talk about here.
Yeah, there's really nothing to mention.
I mean, isn't to me like BlackRock is basically an extension of the U.S. government, right? The U.S. government regulatory apparatus. You have to imagine, right? So, I mean, this is essentially a blessing from on high. But let me give you the. This is the.
No, it's more than that, Michael. No, and look, to your point. Okay, BlackRock is the apparatus. Don't
right.
Look. They write the regulations. Right? They have representatives on these special councils that actually literally write the laws. Them and Vanguard, and they pay big money for that privilege. And a good example, right? There's no spot Bitcoin ETF. Why is that? Well, because BlackRock said no. And BlackRock will be the first one approved when they decide it's time. But right now, they don't want it because that would hurt them and other people's efforts to short the shit out of the futures and push the price down and buy all the assets from the weak hands. That is their game. In fact, someone tweeted at me this. I said that probably a fad thing, and they're like, "Well, BlackRock already owns all of Bitcoin." I'm like, well, not all of it, but getting close. And look, they are the rule makers, and they are the reasons that the regulators are going after these other ones. Yet I find it really comical that Gensler and his cowboy crew went riding into Coinbase to storm the Citadel, saying we're gonna regulate you and shut you down, and the stock tanked. I think it was down 20 some odd percent last week on that news. And then the next week, the white hats, it's like an old cowboy movie, right? The white hats come in, Larry Fink on a horse, and I can see him on his little, mini pony or something.
I would love to see that. I would love to see Larry Fink riding a mini pony.
Oh, no, I know. And look, Larry's way more successful and way richer than me, so I should not make fun of one of the most powerful people in the world. And I admire what he's built. I mean, it's incredible to think he was a fixed income trader in an esoteric element of mortgages to run the world. I mean, it's pretty impressive. So nothing but love and respect. But I do think it's funny that he puts on the white hat and he comes to the rescue. And Coinbase has an interesting dilemma, as do all centralized organizations, which is, do you participate with the government? Not me. I'll give you my little theory on this. You know why Google is Google, right? I mean, okay, they were the 21st search engine. We invested in them in 1996, and there are plenty of other better search engines. There was Webcrawler, and there was Alta Vista, there was Ask Jeeves, but none of them, according to the story, would allow the government to see all the data. And the way the story goes is there's this massive trunk that comes in from AT&T, and it splits into two. And there's the tech closet over here, and there's another closet over here. And this guy said, well, what's that? I said, don't ask. Don't ask. So G-Men, Google, kind of interesting that it's, but if you participate with the government and you show them the data, you will be blessed and anointed. And I think Coinbase just did that. So good for them.
So I would say, and let me just give you guys just in case folks are wondering what we're actually talking about here. There was a partnership that was announced, obviously, between BlackRock and Coinbase, whereas BlackRock basically allowed the ability to get exposure to Bitcoin through this partnership. So top BlackRock clients will be able to use its Aladdin investment management system to oversee their exposure to Bitcoin, along with other portfolio assets such as stocks and bonds to facilitate financing and trading on Coinbase's exchange. The focus of the partnership with Coinbase will initially be on Bitcoin and Bitcoin alone for the time being. So that's when we say this partnership, basically, BlackRock is opening up the distribution right through Coinbase as the execution system there to get exposure to Bitcoin and only Bitcoin for the current time. So
there is something that Mark mentioned in addition to this. This was, to the point of the spot ETF. So I think it was Michael from Grayscale who mentioned something along the lines of, the SEC wants to see more institutionalization of Bitcoin before we can, go ahead and do this. And it really seems like after the short ETF came out, and now this new BlackRock thing that's coming out for, the largest asset manager in the world by a long shot, it really seems like they're setting up the stage, at least to what Mark mentioned, of both allowing users to, directly interact with Bitcoin, and then eventually getting that spot ETF online with BlackRock. And this also, there's been a lot of speculation, and this is another kind of tangent that we could go into, but there's been a lot of speculation that BlackRock has actually been a huge beneficiary of the Mt. Gox coins. So, that's like another whole can of worms. So, and it makes sense, right? If you can go ahead and go through Fortress, BlackRock definitely has business with them. So this is like a whole web of, potential, steps that you can kind of take to see how, the spot ETF might theoretically not be that far away. I think it's also because a lot of grievances in the last 3 months have really been directed at the SEC's inability to pass the spot ETF from Grayscale. Grayscale has been single-handedly the most problematic point of failure for a lot of these lending firms, essentially. Yeah. And if that, at that bottom price, if that became, an ETF, if that discount didn't exist, a lot of firms would be way more well capitalized than they were, right? Like you could make the argument that Celsius or BlockFi or Three Arrows might not have gone under, So all of these things could have been mitigated had that been an ETF. And I'm sure there's some pressure now to, okay, this is actually very negatively, affecting a lot of retail customers that have been involved in crypto.
Yeah, well, and again, in the then they fight you phase, how do you destroy something that you don't like? You weaken the infrastructure. And how do you weaken the infrastructure? Well, you attack the most established players. If you were going to attack a foreign country, what do you bomb their runways at the airports, right? Like that like in Top Gun Maverick, best movie ever, right? But Maverick still finds a way to take off despite the in fact, I should have worn my Top Gun Maverick shirt today. Just such a great movie. But you bomb the infrastructure, and the same thing's true here. Is you look at Grayscale, right? I think it was the fastest, to a certain asset level. I don't know, it was 10 billion or whatever, but it was fast. And what do you do? Well, everyone was playing this game where they were buying the private shares and then selling at a premium because you had limited supply
float, yeah.
of a limited float and higher demand. Well, let's see, what can I do? I can allow shorting of futures to push the price down, and then I can create this, closed-end fund discount like exists in the rest of the world, and just the big guys can arbitrage the little guys who are trying to play this game, and then dagger through the heart is you force them to seize or take the collateral, the lenders to take the collateral that has been impaired by you. Not that I would, accuse anyone of doing that intentionally, but perhaps.
Yeah. Can we make a comment actually on the launch of these ETFs? I would love to see a trading strategy that just does the inverse of whenever a major ETF is launched, or like an ETF or some sort of derivative product in this space. I went back and looked at the ProShares Inverse ETF that was launched at like the absolute pico bottom. Yeah. It marked the literal bottom.
3 times FANGU, FNGU, I think it is. 3 times levered FANG. I mean, was literally at the peak. So you're exactly right. When the big levered versions, although I will say the one place where that didn't work was SARK has been actually pretty good, right? The short ARK. has crushed it this year. So
I think TVIX was also one that just blew out completely.
Brutal,
Or yeah.
brutal. Yeah.
I actually have I was thinking about this with Kat, because Kathy Wood has always been a little bit of a mystery to me. I actually have a lot of admiration for what she's done. But also sometimes I'm like, I'm a little unsure of how much she believes what she's saying too when she does these like public speaking things. Let me give you my most recent theory on this. So Jim Chanos, right? Like very famous short seller. He's got that fund that has like not done super well, right? But the reason why it's still successful is because he is a thing. He is just constantly short, even in this environment of like up only, very bullish market. So he's become a hedge that
it's really
investors want to
successful,
use.
Michael. It's really successful because if you pair it with a long future,
Right.
it's the greatest alpha generator of all hedge funds of all time. Like the alpha is like 13%.
So that's what I'm kind of saying. He's built a product, right? Even though his strategy doesn't necessarily work, it fits in to a larger portfolio of things. And I think that's kind of what Kathy has done with ARK too, because she has made ARK the primary vehicle of liquidity-driven speculation, right? If you want to speculate on liquidity and when the Fed is going to ease, boom, you go into ARK, right? So she's made a thing, right? Do you see what
The
I'm saying?
difference is it's again, as always, brilliant piecing of the pieces
It's a
together.
thought.
No, it's a great point. The difference for me is professionals versus unprofessionals. The professionals use Chanos as a tool, right? As a weapon. So they understand portable alpha. They use his incredibly strong alpha. The fact that he's not completely out of business in a market that has been supported artificially for 14 years through QE is incredible. It's because they have huge alpha. So professionals use that. The levered punters and the pajama traders trading and speculating, and they're speculating and gambling because now that's speculating with leverage on ARK. I think those people have gotten wrecked. I think they will continue to get wrecked. And while I 100% believe in innovation as an asset class, I kind of coined that term way before ARK existed, and you can go back and look at our documents. But innovation as an asset class has been our thing for over a decade. And now, again, not as rich and famous as she is, but so I believe in that. But I'm with you, Michael. When she says certain things, it's more than hyperbole, right? It's manipulation, right? When you say a stock is worth multiples of what any dividend discount model would tell you, just because you own it at a lower price and you want it to go there. And in the world in which we live, of social media and Reddit and low float, right? That's the key. Is you have to have a stock with low float, and that's why Tesla works so well. Is the free float is teeny tiny,
Very low.
and so it's the same shares trading over and over and over again. The best example, I wish I could remember the name of it. It was a consulting company back in 2000. It was a husband and wife team. They owned 99% and they floated 1%. And like that same 1% of shares would trade 50, 60, 70 times over in a day. And the stock just went like this, and they would just feed the ducks and they would just sell the shares. And then they retired and the stock collapsed and kind of did a MicroStrategy 2.0 back in 2001, 2002. And those days are coming for the manipulators. And it's not, there are lots of manipulated stocks out there, but the thing I find, back to the ETF, I find it hilarious that the argument against the Bitcoin ETF is that the Bitcoin market is manipulated. You mean different than the gold market is manipulated, different than Tesla's manipulated, different than all kinds of small cap and micro cap, punting schemes? How about AMC or GameStop? Those aren't manipulated. Come on, just stupid.
But I've got one more question for you guys about this. just about the integration of BlackRock's and more institutions going to Bitcoin in general. What are your guys' thoughts on that infrastructure, right? Because at the end of the day, if what Bitcoin is supposed to be is this highly disruptive technology, right, that provides people an ability to opt out from the finance system, right? And like that's a lot of the rhetoric that gets passed around in the community. But then it's like we're all cheering when BlackRock, enables it to their sells it to their client base. And I understand why that is, right? I understand that more marginal capital needs to come into the system. I understand that greater adoption is good. I understand that this isn't compromising anything about the security of Bitcoin, but it does seem a little antithetical to the messaging. I mean, what do you guys think about that?
Well,
I
it's
don't mean to
definitely
bash Bitcoin here
antithetical
either,
to
because
the. No,
people
it's
yell at me when
definitely
I.
antithetical to the maxi mantra, which is not your keys, not your coins, and CeFi doesn't need to exist, and that's what we're trying to burn down. And Michael, this is my personal pet peeve, is those who rail against CeFi and we're cheering for Celsius and Voyager and BlockFi to fail. They're idiots. They're just complete idiots. And I say that unequivocally because what they don't understand is if your goal is for Bitcoin to be a thing that you transfer onto thumb drive and bury in your backyard, we got that. It's called gold. And we've had it for 5,000 years. We don't need a digital version of something you can lose because you can't remember where you buried it. It's just dumb. What we need is a new monetary system to replace ultimately global M2, but that's a long path. And what Bitcoin is a blockchain, right? And what is a blockchain? A blockchain is a source of truth, and we're replacing trust with truth. That is massive innovation. That is innovation as an asset class. That is the future of money. But it needs to be deposited. It needs to be lent. It needs to be borrowed. It needs to be spent. It needs to circulate. It needs to be at the root of derivative contracts and all of the infrastructure around it. And some of that is going to be centralized. And that's okay because the entity itself is decentralized. And
Yeah,
that's the part that I think is missing.
it's funny. I think Mark, you mentioned all these things for Bitcoin, but you basically mentioned Ethereum essentially.
Right. Yeah.
It's funny. I think like a lot of the conversation that we've been having over the last 3 years, I really saw myself go from being this full time Bitcoin maximalist and to now, I wouldn't really use the word maximalist, but very much an ETH, an ETH head, simply because it just fulfills all these boxes that I think a sovereign money should essentially have, and have that financial stack that exists. And I think to your point on the lenders blowing up, and now a lot of Bitcoin maxis going out and being like, hey, we should label ETH as a security. Like this is it's all just unraveling so quickly for the Bitcoin crowd. And I love Bitcoin. It was it's the first thing that I fell in love with in crypto. But it really just shows, I think the lack of awareness to say like, well, why do I really love this thing anymore, right? Like, is it because it made me fabulously wealthy, or is it because I believe in these core ideals? And I think that question is being asked every single day, right? There's a reason why there's a lot of maximalists who really hate ETH or DeFi or NFTs or stablecoins, right? Because this is all a wildly successful financial stack that has been built, and Bitcoin doesn't have any of those attributes. Not to say that it could never have those attributes, but it doesn't have them today. And that pathway to getting that network value, theoretically, is a lot more arduous for Bitcoin than it is for ETH.
Oh no, 100% here, and this is the thing that again just drives me crazy. Right? Is what people forget because they're not, like Michael, students of history. All of these constructs go back 40 plus years, and really for me was crystallized in 1988 around Tim May, right? The Crypto Anarchist Manifesto. And he predicted everything that would happen over the next 30 years. The problem is no one read the Crypto Anarchist Manifesto because Tim was an anarchist. Solo. I mean, he's up in the mountains by himself and had no friends. And I mean, he had some friends, but no one cared and it was the whole libertarian thing. It's like, whoa, we want to blow up the world. Well, no, we don't. We don't want to blow up the world, right? We want to peacefully coexist, and then we want to make improvements, but we don't blow it up, and we don't want to be, an anarchy is it's just a bad term. And so you had this whole ethos that until Satoshi, whoever he, she, they are, came along and said, here's a tool that actually can be integrated. Now it can take share from these other things, and to your points here, it needs to have more functionality built on top. And I still don't know. Are we going to have a single stack, right? Bitcoin, Lightning, layer 2s and 3s and 4s on top of that, or are we going to have a multi-stack world that's different? And that is the $64 trillion question. And I think there's a lot of time before we figure that out. But ultimately, what we know is that banking, whether you love it or hate it, is what separates the really great countries from the really bad countries. Look at any terrible country.
I agree with that.
Have a very bad fractional reserve banking system, right?
Yeah.
Every good country has a good fractional reserve bank. Now, it's controlled by a cabal, right? 800 years, the Rothschilds and the Medicis and JP Morgans and now BlackRock. Great. And that cabal's power is shifting, which they don't like. And this new movement allows more people to be involved. And that's a really good thing, but it has to have elements of centralized systems that we think we don't want, right? Oh, we all want to be sovereign. We want to be our own bank. Sure. That is good. Except I talk about this a lot. I really like the fact that I don't have to sit on my front porch at night with a gun for the banditos with bigger guns to come try to take my stuff.
Right.
I'm with you on
because
that.
my
I'm with
money
you on
is safe, quote unquote, in an institution where if they want to rob the bank, go rob the bank, but don't come rob my house,
that. Yeah.
right? And an asset that sits here. I was with a guy and he says, I said, well, what about the personal security risk? What are you talking about? So someone comes to your house and says, give me your keys. I'll go to my grave. I'm like, that doesn't fix the problem, right? Saying you'll go to your grave and not give up your keys, okay, fine, but that's a bad outcome for everybody. So I don't get the anarchist loner. We want to be just here. I think we need a more holistic and more positive solution, which I think a lot of people are working on. I'm really excited about.
Yep. I will just say one word in defense of Bitcoin, which I know we're all supporters of. I do think there is something to be said for feature, not a bug, of how ossified both kind of like the community and the code is. There's less attack surface. It is kind of what I would like from a money. So I do want to defend that. Okay, whatever.
That's a great point.
Look, all right, I want to get to the last point here. This because it's a big integration. I know we're running low on time. Meta. So Meta has just launched a whole suite of new, so their integrations, again with Coinbase. So big week for Coinbase. Credit where credit is due. Well done, fellas. So there's an integration on the NFT front. So they announced that they were launching like NFT support back in May, I'm pretty sure, but now they've spread it worldwide, right? And they've got integrations with Dapper Wallet, with Coinbase Wallet. That's in addition to existing integrations that they have with MetaMask, Trust Wallet, and Rainbow. And basically, they're really leaning into the ability for NFT creators to post, like very easily post their NFTs on Instagram at no charge. And the reason that I want to just bookend this and say that this is important is because Meta has, 2.5 billion users, right? When they announced, like this whole stablecoin trend, Zaheer, that you were talking about, right about when that started was when they announced Libra. And even though it was a failed project, they still basically jump-started that entire. You can look at when they announced it and the
100%.
chart of stablecoin market cap. So they very much legitimized it. And I think everyone is just sleeping on Web 2 bringing users over into Web 3. Like it's going to happen at some point, right? So I just think these sorts of integrations, while the market might not know how to value it, I mean, they feel very significant to me, is what I would say.
Yeah.
What do you guys think?
Extracting all of the positive things that might come out of user adoption, I think it goes to show you something very, very interesting for one of the largest companies in the world, which is, Mark Zuckerberg and Facebook tried to fight crypto in 2018 and 2019, right? They thought we could own this whole thing and we could go build it on our own, and we don't have to play ball with the rest of these losers, right? And then they all came back, right, in 2021 and 2022. For the love of, I mean, he changed his company's name to Metaverse, right? All of the core blockchain teams, including David Marcus, who led the Libra and Diem Association, have completely, became crypto pilled, and are very, very, not your keys, not your money kind of thing.
Yeah.
And then you also have Aptos and Sui now, which are now becoming their own blockchains, right? So it's like the entire thing from Facebook completely failed, which is good because they tried to pick apart this market, but it now came back in a way that's like, we still believe so deeply in crypto that we're willing to, say goodbye to our branding of this entire asset class and instead play ball with everyone else. And I think that's the bigger point that I wanted to make here. And that's the bigger point that people should be looking into is, we went from an environment where they wanted to own the whole thing and have a humongous seat at the table and just come along, but now realize that even their power, even their resources weren't enough to really make a dent in crypto, and now they want to play ball with the rest of us. And I think that is the right kind of mentality to have. And for a company as large as Facebook that has the resources, the money, the connections, whatever you want to call it, they literally own half of the internet in India, right? For a company that has this much mind share, for them to come and say, hey, we're going to integrate all of these third-party apps, right, at no additional charge, and we don't have to necessarily cut any sort of deal with them, that is a humongous advantage for crypto. That is a humongous win, right? When Apple goes and brokers a deal with apps not on the App Store, they're taking a humongous cut from that, right?
Right. Right.
Facebook is not taking any sort of swap fee, to my knowledge at least, right? From MetaMask, from Coinbase Wallet, from what have you, right? So this is all becoming much more real at a much faster pace. And I think a lot of it, Michael, we talked about this earlier, a lot of it really comes down to this boy who cried wolf mentality from crypto, where people have become so apathetic towards, the Mount Gox narrative, right? The institutions are coming, we're getting mass adoption, all of these things, they're all happening, right? But people are just like, I don't care anymore because,
Right.
I've lost all my money, or I just, who cares about the space or whatever. But this is what they mean by that mass adoption happening in the background and people just being asleep at the wheel. Alex Kruger posted something great regarding the BlackRock thing. He said, 2 years ago you had BlackRock announced that they would integrate with Coinbase. You'd have had 20% on the day for Bitcoin,
Mm.
right? And today it's like sideways to down, right?
Yep.
We all became macro enthusiasts instead.
No,
Um, and
it's a really really good point, and I think related to that is Meta's down a lot, right?
Yeah.
Over the past year, I mean, it's down a lot,
Yep.
and there's a reason. It's because they're losing that dominance that they've had as a platform, right? I mean, there was a time when we thought they were going to have 4, 5, 6 billion users, and that user growth has slowed, and people have realized, wait a minute, why do I create content for them for free? But the one thing they do have in that critical mass is an ability to wipe out innovation and competition. Snap is a great example with Instagram and how everybody just flocked to the easier platform. But I do think this attempt at making nice is, I think, going to sow the seeds of their demise, in the sense that this is a platform that was built around the idea of single company dominance, or multi company dominance, like duopoly, triopoly, oligopoly, and that is not the direction we're heading in a decentralized world. And there's going to be an ability for each of us to own our identity, to own our attention, to own our creations. And look, a whole bunch of, I hate to say this, a whole bunch of people putting mediocre art on a big platform doesn't change the fact that it's still mediocre art. There's a very small amount of really good art, no accounting for taste. But I do think it's important, but I actually think it goes to, at first it was going to be, we are going to be the metaverse, right? Meta is where everyone's going to come. Nope. nope. If I'm going to go to a concert, I'm not going there. I'm going to go to Madison Square Garden. I might go to Disney Town Square. I might go to the Fortnite town hall. Although I thought it was interesting. I just learned this the other day. Travis Scott, I guess, is like upset because he became the Fortnite guy. Like it like ruined his career.
What?
Because
Seriously?
he was associated with being the Fortnite guy, and that wasn't cool anymore, right? And I think
Is
Travis
Fortnite
Scott's
not
doing
cool?
fine, right? I think, but I just heard this from a bunch of kids who were saying, "No, he's the Fortnite guy. He's cool." But I just think that's interesting, right? So where you go and where you show your wares is
Mhm.
brands you. So
Mm.
but I do think the chance that Meta
I think that's
has,
very interesting. Yeah.
the chance that Meta has is numbers, right? And if they can get those numbers to be loyal to the spot, like I still have a Yahoo email address because I'm old, and I'm not going to give it up, and so that's where I go, and so I get my stuff from Yahoo, which is weird. Most people get it from Google and other places, but communities will go where they're comfortable, and that Facebook community, even though I'm not part of it, although it's funny, I had to create a Facebook account for one of the games I play with my son. And so I get these notifications every day. Oh, this person wants to connect with you on Facebook. I'm like, I don't even know how to sign into Facebook.
All right, guys, I know we're running low on time here. We have one other very important announcement, which is we've got DAS coming up in September. We've already talked about it, but more importantly, there is a competition between me and Jason and Jack to see who can sign up more people. So there's a code, Mike250. I need y'all to sign up and use this code because please, for the love of God, if Jason beats me, I'm not going to be able to look at myself in the mirror. Okay?
Exactly.
I don't
Mike
even
250. I'm gonna
Mike
tweet it
250.
right now. Mike
I don't
250.
even
Mike
I don't even need
250.
Mike 250. Tweet it out. I don't even need me to win. I just need Jason to lose, please, for the love of God. There's also a little prize that's associated with it as well. There's a dinner, right? So we're incentivizing ourselves. I will overshare on my personal life here. I just got a new lady friend in the mix. So do it for Kate, so we can go out to a nice dinner. All right, do it for Kate. Do
Nice.
it for
Do
down
it for
with Jason.
Kate.
Mike 250, guys. I need your support here. All right,
Mike 250.
sign it.
Mike.
And Mark is going to
And
be
if
there as
people
well.
don't use Mike 250, then I'll just boycott, and then there will be no headliner. So
I appreciate it. Yeah, Mark is a DAS. He's a Blockworks OG, but he's a DAS OG as well. Closed down basically every DAS we've ever done, and it's been, I mean, we've talked about it on the show before, but it's been a freaking blast. So come on, you got to come and see Mark in person. And Zaheer, maybe I'll bully you. I don't know what your schedule is, or hopefully you'll be feeling better by then. But hey, man, if you can make it by New York, I know you're a digital nomad, but we'd love to see you there.
Yeah, hopefully I can come back to the US by then.
All right, cool. All right, fingers crossed. Fellas, this has been a ton of fun. This was a great pairing, by the way. I'm glad we made this happen. We'll have to do it again soon.
No, that's great.
Zaheer.
Appreciate it.
Zaheer, thanks for coming on. Mark, favorite hour of my week, my friend. I will see you next week.
All right. Have a good
Cheers,
weekend,
guys.
everybody.